Well, thank you. I'm Tom Harris. I'm the director of the University Center for Economics and Economic Development and a professor in economics. This is kind of our quarterly report outlook, you might say, ag outlook on Nevada ag prices. Of course, with this pandemic, there's a lot of interesting things going on nationally, internationally. And with the presidential change, there's going to be interesting impacts to agricultural sector. I should say also, we'll have making a presentation will be Malieka Bordigioni, who will be doing it, and Mike Helmar. I want to say Mike is going to be retiring in the end of December. And Mike, we appreciate all you've done for us. And Mike, why is Mike retiring? Because when I first came here to UNR, he took my first course, and we did all of our calculus then in Roman numerals, so it's been a while. Mike has done a lot of work. He got his master's here and worked with Moody's Analytics. Is that right, Mike? You did for that. And then he has worked a lot with FAPRI, the Food and Ag Policy Research Institute, which we do estimates here, and Mike and also Malieka. So Malieka's going to do the presentation today, and Mike will. And I want to say, Mike, I do appreciate your many years here and sticking. Even though you went through my class, you came out okay. So, Malieka.
Well, that's right, Tom. Anything stupid I say, I just blame on you.
That's right. I was going to say, everybody, please mute. If you have any questions, I'll be, Bobby, will you monitor the chat box, see if anybody has any questions? And when they finish, or Malieka, you feel like there's a point you want to have people open up and ask questions, please do. So, Malieka, go right ahead.
All right. Good morning, everybody. I'm Malieka Bordigioni. I'm a research manager in the University Center for Economic Development, and as Tom mentioned, work with Mike on the FAPRI project as well. This morning, I'm just going to give you some updates on some livestock prices, milk prices, a couple other commodities, and talk to you. We're going to first kick it off. I'm going to share my screen here, and I'm going to kick it off talking about the new resurgence in COVID. Let me get this going. Okay, little delay. There we go. All right. So, as we're all well aware, we're seeing COVID kick back up now, and as we know, this had a great impact on all industries throughout the U.S., starting back predominantly in March. It had a particular impact on the agriculture industry and the supply chains related to the agriculture industries. Specifically, milk and meats is where we saw the hardest hit. What I'm showing you here is a chart from safegraph.com. They use GIS data to plot foot traffic in industries across the US. And we can see here, we see the big dip. So this is showing decline, so the negative change in foot traffic to all industries across the US. You can see the big dip from the spring, but then on the tail end, the last data point here is actually November 30th. And we see that it's really in a decline that we haven't seen since late spring. There's a couple upsides, couple downsides. One, as I'm sure we all are, the population is very quarantine weary. So folks maybe are not staying at home as much as they were. They might be gotten used to going out to restaurants or visiting with friends. So we're also coming up to a busy holiday season. So we might expect that the dip will not go down as far. We've also, I think we've all learned, and industries have learned lessons from the shutdowns that happened in the spring, and that will hopefully help ease some of the backlogs in the supply chain and ease the overall industry impacts. We're also coming up to a change in federal administration, so there's a lot of unknowns about how the new administration will address the economic issues related to COVID-19. But hopefully we will stay at a more or less be less impacted by it as we see this surge. One of the, in sort of a foreshadowing before we talk about the commodities, one of the consequences of COVID-19 has seen a weakening of the US dollar. I looked at the a dollar index this morning, and we're at about 90.93. So this particular index compares the dollar to a group of currencies, the yen, the pound, the euro, and a couple other European, Canadian dollar, a couple other industries. And we are at the lowest level since spring 2018. We're not at historic lows by any means. The US dollar has been impacted by COVID because it's held as a reserve currency by a lot of countries around the world. A weakened dollar, a strong dollar, there's pros and cons to both. And for agricultural exporters, a weakened dollar is a good thing because it makes us a little more competitive on the world market. All right, so here are our feeder cattle prices. Again, we see the large dip in the spring and that prices have come back. Prices are down about 5%, give or take, over the same time in 2019. Our feeder cattle price yesterday was $137.80 per hundredweight. So while we're not at historically low prices, another aspect squeezing producers right now is just that feed costs are relatively high currently. And producers are holding animals. They're still holding animals a little bit longer. During our last Sage Outlook a couple weeks ago, Mike had shown this graph. Unfortunately, we don't have any new data since then. This shows that, you know, the supply chain bottleneck has opened up for cattle slaughter in particular. But it's, as you know, looking at that dip going down, we might see some more backlogs. And we are, like I said, they are holding animals longer. Those animals are getting to be larger weights. So having, being harvesting more weight per animal is also going to increase the supply, push down those prices a little more. And again, you hold them longer, you feed them longer, so you're incurring more costs as well. So that's squeezing the ranchers, unfortunately, or the feedlot holders. There's seems to be a trend of declining cattle inventories, and COVID has sort of pushed that along. The declining inventories in part due to drought and some slaughterhouse. There was a big fire in a slaughterhouse in 2018 that, but that's underway. We know the cattle cycle is very long. So the time will tell what that looks like a year from now. In terms of inventories, of course, higher inventories would increase supply, drive down prices further. So if there are declining inventories, that could potentially help hold up future prices. And again, livestock producers, cattle producers may see some benefit from the softening dollar, as in combination with an increased global demand for beef products. So there's a upside to a softening dollar. Here we can see feeder cattle prices by state. So Nevada is on here. We're down a little bit from where we were about a year ago, but we're pretty median for the Western region. It's nice to be able to look. This is from cattlerange.com, and this was produced yesterday. So you can see overall prices are down, not quite 1% since last week, but down about 5% since last year on a national average. Next, I'm going to talk to you a little bit about sheep and lamb slaughter. Again, this particular market has stayed relatively stable as compared to cattle. You can see our 2019 and 2020 numbers are similar. Again, Mike had talked about this a couple weeks ago in our last Sage Outlook, and we haven't gotten any new data. So the numbers are similar to 2019 we're moving through. However, we do see that the lamb weights being slaughtered are well below 5-year averages. So again, this will impact total revenues as producers are harvesting fewer pounds per animal. And on to milk. Milk has been really volatile. Milk, of course, in terms of ag products, cannot be held. Liquid milk cannot be held in the same way that meat products or crops can be held. It's very short shelf life. Milk was hit just drastically back in the spring. One, because of closures of schools and commercial and industrial ventures, and also because that was a peak time of production. So there was a glut in supply. We're looking at something similar right now. So our prices yesterday were $15.39 per hundredweight. That's down about 21% over this time last year. We are moving into a period of cooler weather and longer nights, which encourages herd milk production. So as we drive up supply, that's going to push down on prices. And again, we're seeing closures of schools, commercials, a real decline there. So that's going to contribute to that supply glut. However, the dry milk prices remain a little bit stronger. I don't have a chart for you there, but a little bit stronger in comparison to the fluid prices. Of course, you can hold dry milk powder longer. Those dry milk prices are also encouraged by exports. And as I mentioned, with that weakened dollar, we're a little bit more competitive in the export market. Prices yesterday for Class 2 dry milk were up about 1.7%. For Class 3, we're up about 7.4%, and Class 4 was down about 1%. Moving on to wool, prices really stable for the last month or so. This is actually showing the Australian dollar for 100 kilograms. So I mentioned I was looking at that dollar index. The Australian dollar isn't part of that dollar index that we're weak against, but we're going to be more competitive on the market. Of course, Australia and China have been having some trade disagreements. So there may be more opportunity there for US producers. But the prices for now are relatively stable at the level they've been at for the last month or so. And then the last commodity we're going to talk about is hay. Got an update yesterday for October numbers, so the data, there just tends to be a lag there. The dotted lines are the 2020 numbers, and the solid lines are the 2019 numbers. Red is other types of hay, and the blue is alfalfa. As you can see, prices are being held up pretty well. This is in large part because of shortage of supply. So it has not been a stellar weather year for alfalfa producers. And it looks like when we look to the Drought Monitor in Nevada, it looks like it's not getting better. It's actually, the drought seems to be intensifying. And with that, I will open it up to questions or comments.
Malieka, I have a question.
Yes.
We recently published a story about gold sort of maintaining the economies of the rurals. Are you seeing that first? And then second, is that having an impact on ranching operations that you're aware of?
Did you say gold?
Gold, yeah.
I am, Tom, you might have better insight, or Mike.
Yeah. If we look at gold in Nevada, gold is by far the largest export from the state of any products from the state. You know, selling it outside the state to other places in the country and other countries as well. So that's our biggest export value. I don't know that it would really impact the ag commodities that much. I mean, the mines are established where they're established. They use the water they use already. But unless you get a big increase or decrease in gold and shift that water around a little bit, if other folks can use it, don't forget those mines hold those water rights, and they don't usually want to come up off those. So it has an impact on the state economy for sure. It keeps our exports up, but in terms of a direct impact on agriculture, I wouldn't believe so.
Yeah, you're right, Mike. But it is part of the natural. It's one of those unique things, as opposed to Vegas, which has been hit with the casino industry. The natural resource industries, even though it's smaller than the casino, has been performing very well. Gold, a lot of them. I know my old days when I was working on my master's in Texas Tech, we found a one-to-one relationship with a rancher in the high plains of Texas who also had an oil well. Well, we don't have that in Nevada. Some ranchers do have gold mines, but anyway, it is part of the natural resource industry, which is growing. And I think there's even some places in paddies from Winnemucca and Humboldt and Esmeralda where lithium is being, but they're kind of disjoint now. The water that the gold use when they do the underground pits, they're pumping it out, and there are some in Eureka. Some of the mining companies are also growing alfalfa with this water, but it's not as big as some other places like Texas, where you have a lot more private lands, and ranchers could have oil wells with them. Oh, Mike, you're quiet.
Yeah, I got it. Yeah, not very often. Yeah, that's exactly a great point, Tom. It is the land ownership patterns between Texas or many other states and Nevada or some other western states that ranchers probably don't own those gold mines because they lease federal land by and large. There's some, but for the most part, they're not holding those commodities.
I did once in one of my early years. I did have one young lady who was from a ranching family in Elko, and Doug, I don't know how prevalent it is. Her family did have a gold mine on their private land, but it's not like high plains of Texas or in the Midland, Odessa, Texas. Let me ask you something. How about with the change in administration, we may get a change in tariffs? I've been hearing in the Midwest, soybean producers are very positive on this. Anything on potential impacts here?
That's a really good point, Tom. And that's something that we, Mike and I have looked at a lot because we run the international crops model out of Nevada. And yeah, there is the Biden being part of the Obama administration. We can maybe look to the Obama administration a little bit to see how they addressed trade tools, trade negotiations, and that sort of thing. And it seems like they may be more interested in trading in the world market without implementing tools to identify or target specific industries. Maybe, I'm not sure, Mike, you can give your input and see, what you think, but that is, I mean, it's really yet to be seen because we're in the middle of these trade patterns that were new under the Trump administration. And yeah, if I was a soybean farmer, I'd be pretty hopeful right now that maybe some of these instruments would drop off.
Mike, you have anything you want to say?
Yeah, there we go. Yeah, you're absolutely right, Malieka. And if we go back into the campaign and even very early on in the campaigns, Joe Biden and even the Democrats before we really started the campaign season were of the opinion, and I think it's not just campaign promises. I think it's a fundamental perspective on their part that they would not continue the retaliatory tariffs against China. Now, on our side, those, of course, were not ag tariffs. they were industrials, they were metals and things of that nature. Those were our tariffs. Then China retaliated with the ag tariffs. But if they drop those other tariffs, China's going to drop the ag tariffs more than likely. And we've seen a little bit of an indication of that already, that China has started importing more corn, more soybeans from us, already even before this. And one of the reasons for that is they are no longer so much interested in protecting their ag industries or punishing ours. They now have a need for those commodities. And when China needs something, China buys it. And that's where they're at right now. Their soybean imports from the U.S. especially have jumped, and corn as well as some other commodities. So they've already shown that they particularly if the Biden administration softens on those tariffs, that they will buy from us. That takes us to the phase one. I don't know if anybody remembers phase one from 6 months or so ago, or 9 months ago, that China had agreed to increase imports of a lot of agricultural commodities. They agreed to do it, but that's pretty much gone out the door, not because they're not abiding by it, but because it just doesn't matter. They're importing stuff now. So I think that we're going to have a lot of those tariffs on ag commodities just go away. Probably there'll be some negotiations around it, but they'll go away, and that'll help our ag producers.
Well, let me ask you just for impacts to range cattle prices here in Nevada. Any?
There were some beef tariffs, but beef was not one of the major commodities that China imported from us. Although it made an impact on our beef exports, but the percentage or the proportion of beef that we export compared to what we produce is so much smaller than the grains and oil seeds. There will be some impact on it for sure. There's no doubt about it, but it's not going to add $10 per hundredweight.
No. Anything on alfalfa hay specifically?
China doesn't import much alfalfa from us, maybe a little bit. We do export to some Asian markets, Japan, Korea. It's a lot of the cube stuff, but not so much in terms of alfalfa. Now, where that will get a boost is from feeds in general becoming more expensive, and maybe some dairy products too. So
I remember Malieka was showing milk. How about milk with the trades there?
Well,
trade changes.
Yeah. And if you want me to shut up and you want to chime in, Malieka, you just go right ahead. Yeah, milk, and particularly, it's not fluid milk. Fluid milk exports are very small. We export some across the border to Canada, some across the border to Mexico, but for the most part, we export product. And one of the biggest products we have with China are the milk powders, both skim milk powder and whole milk powders. And now if we relax some of those tariffs and get China importing particularly those whole milk powders more, that is the biggest market that our Fallon powder plant.
That's what I was going to say. That's very
China. That could be a boon to Nevada.
That's very big, because and then the last one they're going to have is we're opened up a new ag experiment station in Eureka with sheep and all. How about sheep? Anything on? It's kind of a more of a work between Australia and New Zealand to me. But any impacts with lessening tariffs for the sheep prices in Nevada?
I'm not sure. We do export a little bit of wool to China. Not much sheep meat that I'm aware of, but probably not so much in wool. But if China and Australia take care of their trade disputes and they start pulling in more Australian wool, and China's been kind of up and down over the last few months, depends on how much wool they need again and how mad they are at Australia. But if they start pulling in more, then we've got to remember that the U.S. doesn't set the world wool prices. We're price takers, and we take it pretty much off that East Coast Australia wool price. And so if that gets pulled up, and especially with a weaker dollar, we'll see wool prices increase in the U.S. as well. So that could help us, and particularly since we have high quality wool, as the Australians do too. But the merino wool that we're having in Nevada will really benefit from that.
One last one, Mike or Malieka. This softening of the dollar, how long has that been going, or what are they forecasting? You see anything? Because softening the dollar would mean easier we're exporting a cheaper product. not price, not cheaper as quality, but cheaper in price.
Yeah, it's the dollar seems like this index, it's the DXY. What is it like? I think it's ICE produces this dollar index, and it was pretty volatile this whole last year. I mean, COVID really upended a pattern. It had been strengthening. So it had gone through a weak period from like 2007 to 2015. And when I say weak, again, for anyone who might watch this afterwards, it's not necessarily good or bad. There's pros and cons to a stronger dollar and a weaker dollar. It had been down around 70 something in 2000, like around 2008, say. And it stayed at lower levels and then started increasing, I think around 14 or 15 as the recovery from the recession. And then it had been pretty strong for the last couple years, last 3 or 4 years, but this year it's been pretty volatile. So it's been in a decline pattern for the last couple months, I think. I mean, we're at the lowest level since spring 2018, but yes, this definitely will help exports. And actually thinking of the patterns when it was low, I mean, this is also tied to the interest rates, right? So we have really like exceptionally low interest rates. That's another administration area that's going to change with the new administration. We'll see, I mean, I believe Janet Yellen was the Treasury. So we'll see what happens with the Fed Reserve Board. But anyways, yeah, I mean, all we can do is look at the past, knowing Biden was part of the Obama administration. I don't know. But there's other mitigating factors there as well.
Let me ask around. Doug Busselman, you got any questions you'd like to ask about the ag prices?
No, I don't. I appreciate the update and don't have any questions. We also get pretty continual information from our national organization and the economists who are working there. So it's good to get kind of a flavor of what's going on in Nevada and from a Nevada commodity perspective. And so thank you.
You bet. Doug or Mozart, there's, I'm not a production economist, but production agronomist or animal scientist. But I have heard that with the smoke in the summer, that smoke caused our alfalfa production to decrease a little bit, and also caused in the range cattle a lot more pneumonia, which had some impact. So I don't know how much it's been. I've been wanting to get that to show what smoke can do, but I don't know if y'all heard anything about this, about the rangeland fires and the smoke that came during this summer, how it's kind of retarded some of our ag production, and specifically in alfalfa hay, what I've heard, and also cattle getting more pneumonia. Don't know if you heard anything.
I haven't heard anything on that. I know that there were some concerns in California about the smoke and how it damaged some of the grapes and some of the crops that they were growing there. I've not heard of any impact for Nevada. I think the Nevada issues are probably more related to drought. And the conditions that are playing out there. Also, in terms of, there was some kind of a cold spring, and so the first crop of hay was kind of set back a little bit in terms of production. Yet bugs were a bigger issue than normal as well. So that's kind of the. I think Nevada ag is so far has fared fairly well and hasn't had a lot of the same impacts. Some of the commodity specifics, some of the dairy in southern Nevada, I think, was affected when they ran into trouble with the school districts closing, and they had contracts to provide milk to that processor down there. But for the most part, our members seem to be indicating that there was a pretty good year, I don't know that we've got some of the crisis problems that others are having.
Sure.
But maybe that still remains to be seen. I know a lot of federal talk about the amount of money that Farm income is at an all-time high, or second all-time high, but yet, at least a third of that came from federal payments. And so there may be some tax issues that some people are going to have to deal with, even though they don't have the money necessarily to deal with it. So it's going to be an interesting next few months.
I guess also, Doug, in the area like Fallon, our reservoirs are quite full here in Boca and Stampede. So the impacts of the drought, at least for surface water, I don't think Bureau Rec had any decreases. I do know there may be some decreases with groundwater in the Eureka area sometime, but at least it usually takes a drought, 2-year drought or something before we start seeing decreases by the Bureau Rec on our irrigation. So I don't think Fallon really saw a decrease because of drought.
I don't think they did this year. It's going to depend a lot on what the upcoming winter provides.
Yes.
As well as not just their situation, but some of the others that use water that comes down the Carson,
Yes.
and whether there's a snowpack there. And as you're correct that the groundwater, as long as the groundwater is holding up, that's maybe not quite as critical. But at the same time, range conditions are probably a bigger issue, and 2/3 of Nevada's ag economy comes from livestock that are raised on federally managed land. So range conditions, I think, are going to be critical as we go forward, and whether or not there's water available for grazing to take place on those federal lands, whether or not the federal agencies are going to be reacting to the drought conditions and implementing restrictions and other kinds of things going forward. So it's all, agriculture always can find a crisis to deal with. So we'll keep doing that.
That's true. Mozart, I saw you had some comments. Would you like to chime in, if you would? Mozart's in the animal science. I remember he said they had some impacts in the short term, and I believe the University of Nevada Experiment Station is now going to be. Oh, he doesn't have a microphone. That's all right. But I do believe that they're trying right now, going to do some NAS research on impacts of smoke on production. So that'll be interesting. Patty from Winnemucca, you have any questions?
No, thanks, Tom. Just was concerned about the dairy prices and
Right.
pools that were mentioned there. But I think we're also seeing some food production companies that are moving into the area that may be using some of that dairy products. So
that would be a boom.
There.
Oh yeah, that dry milk would potentially have even downstream could have, if we get drought out of the way and all this, could mean maybe larger alfalfa production, all this kind of stuff, and could be a boon to moderating our dairy industry. It's not like Wisconsin, but and the forage linkages, like you're saying, would be very good. Malieka, are there other questions? Malieka or Mike, you have any last comments?
I think that's about all. I would just say,
Okay.
yeah, going forward, I think Mike made a really good point earlier that in terms of export trade from Nevada or the U.S. in general is looking at changes in demand patterns by the countries, the currency, and these trade negotiations. So there's many different factors that will influence what our trade patterns will look like under the new administration.
Well, Mike, I want to thank you for all the years you worked with us. I'm going to miss you, but I guess you'll still be invited on this. The other thing is this is being recorded, and when Bob has it, we'll have redacted what they call for ADA compliance. We put it out and notice for other people who couldn't attend that they could watch it also. So Mike, appreciate many years. And
Thank you, Tom.
Definitely.
And I want to thank all the people that are on this today. This
Sure.
is not my swan song, so.
Thanks,
all
Mike.
right. Yeah, and get your wife out there chopping wood. All right. Well,
All right.
talk to you. We'll
That's
talk
why
to
I
you.
got married.
Bye.